Can a stock drop 50% for no reason? Usually when a stock drops that much, it's because the financials deteriorate or there's just a bear market. But neither are at case here. In fact, Adobe's revenues have increased 10% and their operating profits 29%. This comes alongside the stock market actually being up 39% while Adobe stock is down 57% at the time of this recording. So, of course, the question is, why are they down so much? And unsurprisingly, the answer is going to be AI. But what really is the AI risk? Now, many investors are rightly scrutinizing their investments, wondering what the implications of AI is going to be, because no one wants to own the next Chegg, which for those that don't know was basically a homework helper that now is down almost 99% and is kind of looking like it's going to be in the trail bin of history as a business that was totally disrupted by AI. But a key difference there is you already saw that in their financials. Their revenues are down and they went from profitability to loss making with no clear competitive position. And so that is not the Adobe story though, and that is not what AI means for Adobe. And in fact, I, in research, look at a lot of different videos and I see a lot of the things that are said about Adobe and specifically on AI. And I have to say that there's very few pieces of material out there that are properly thinking about this risk. Now, I'm not going to say AI is going to have no impact on their business because clearly it will. Everyone has used Google Image Generator, Nano Banana, I don't know why they called it that, as well as OpenAI, Sora, all these other image generation tools and video generation tools, which are really impressive and can push out really compelling AI generated content. And Adobe is in the business, of course, of editing photos and videos. And so isn't this tool going to be irrelevant in a short while? Well, that is what many people certainly think, and the stock is being priced in as such. It right now trades at just 14 times trailing earnings. And so this video though is not going to be another sort of summary of the financials and what the stock price is doing and pulling up a bunch of charts and graphs and just reading them to you. No, instead we're going to do actual business analysis to understand the company, because the reason why the stock has been sold off so much is because most investors didn't understand the business. And of course, if you see the stock price is down that much and you don't understand the business, you're going to let your emotions drive you, which is exactly what is happening now in the stock market for a lot of names, not just Adobe, which is why deep research is really critical to having confidence in the actual positions you hold. And so that is what this video is going to be focused on, understanding the business model. Now we're going to break this down into 5 parts. The first 2 parts are going to be about breaking down their 2 business segments. Now, the first segment is going to be digital media. This is 75% of revenues. This is probably what most of you know the business as. This is where a lot of their, video editing, photo editing tools fall into place, as well as their PDF business. Most people haven't been mentioning that one lately, but that is still a part of their business. We'll talk about all of that. That'll be the first part. The second part will go into the next segment, which is going to be digital media. That is a business people don't talk about that much. It's more of an enterprise business. Third, we're going to talk about the AI risk, what AI means for Adobe, both the threats and the opportunities. Fourth, we're going to touch on other risks that I don't see other people talking about on Adobe. It kind of touches on AI, but is not really actually directly impacted by AI. And it is actually kind of where you should pay more attention to if you are thinking about investing in Adobe. And finally, we will hit on valuation. And so those are the 5 parts. But first, you should be wondering, why are you listening to me, yet another random finance YouTuber? So I used to work at Goldman Sachs in investment research, and then later I worked at Capital Group on the buy side, covering a lot of different sectors, including technology. Now I am a registered investment advisor, but I also run Speedwell Research, which produces in-depth research on stocks. And so I have spent many years, many thousands of hours researching businesses, and I use all of those skills to research Adobe stock. This video took probably about 40 hours of research just on this name alone. And so if you do enjoy what we're talking about here and you want to see more videos like this, I just ask that you go ahead and hit like and subscribe so we know to actually produce more content like this that actually focuses on analyzing the business instead of just talking about, the stock price chart, technicals, and, pointing out a bunch of charts and saying these numbers are going up. And so it takes a lot of work to produce these videos and research them, and I appreciate your support. Now, when I do research, I do look at all the other YouTube videos out there, and I will say there was one other YouTuber out there that has some good content on the actual analysis of the business as well. And so at the very end of the video, we'll mention that if you want more analysis on Adobe as well. But let us get into it. Adobe. So right now you're talking about a business that has these two main business segments. The first one is going to be digital media. That's probably what most people think about when they think Adobe. That has $17.4 billion in revenue. And then the other segment is going to be digital experiences with $5.4 billion in revenue. So this first segment is going to be 75% of the business, and that is what we are going to be talking about first. Now, this segment has incredible 95% gross margins. Their products include stuff you maybe would have heard about already: Photoshop, Illustrator, Premiere Pro, that's their video editing tool, Lightroom, that's a very popular tool to adjust lighting on images, and then also Firefly, that's sort of a newer thing with AI. We'll talk about that later. And they have a bunch of other apps kind of along the same lines of creative work, stuff with editing photos and videos. They have many, many different products, but those are kind of their key products that they put out. But a lot of people just buy a suite, which gives them access to all of the products. That is what is going to be called their Creative Cloud subscription. And so pricing on this varies, but it's generally speaking about $40 a month, and you get access to everything here. So they have these two sort of segments within the digital media business. They have the Creative Cloud subscription. That's going to be about 80% of this segment, so the majority of it. Or you could think about it as being 60% of overall revenues. And then they also have the documents business. And so this is going to be Acrobat Solutions. This is everything dealing with the PDF, basically. So they invented the PDF a long time ago. Those annoying PDF editors that you have to get into anytime you want to edit it, that is because they basically have total dominance over this format. They got many people on these, $15, $20 a month subscriptions. And so within that segment, that is going to be about 20% of it, or about 15% of the overall business. So you're thinking about the business as a whole, 60% of it is kind of this creative work, 15% is going to be PDFs, and then the other 25 we'll talk about in the next segment. So let's talk about this kind of creative business. That's about $13 billion in revenues for them. Kind of annoying, they changed the segmentation of all this going forward, but we do still have these disclosures, so we get more sort of insight into the business. Now, this is used by a lot of artists, a lot of designers, and a lot of marketers. So everyone who is a professional designer, a marketer, someone at an enterprise company who designs their ad copy, designs how the website looks, the mobile app looks, they're very familiar with Adobe. Adobe kind of runs a lot of this. Now, there's competitors, and we'll talk about that, but it is still an industry standard. Everyone has to really know how to use Adobe, and a lot of times, clients will actually want the files in Adobe formats, like PSD, for example. The same way they created the PDF format, they have these other formats for video editing and for photo editing that are industry standard. And so it's really only their tools that can go in and edit that. And if you are a client, you want to receive that sort of file in that format so you can maybe make changes to it too. So that's kind of why it's an industry standard, in addition, of course, to just being, a pretty good app. And they're not known for being the most user-friendly. They could be a little intimidating at first. That's actually why some competition has come in from the lower end, namely from Canva, which we'll talk about in a moment. But generally speaking, industry standard, they're very good at even the low end, the high end. And so kind of the most popular app, highest market share. They don't have dominant market share, but they do have the largest market share of the other players, which we'll talk about and kind of help you understand the competitive environment. And so let's just talk a little bit about competition. And I think that'll help sort of clarify their positioning. So if we rewind a couple years and forget about AI for a minute, the real risk to the business model was now all these SaaS companies were coming up. You have Canva that was attacking them on the low end. They had this freemium app that's super sleek UI. We actually use it to design the thumbnails, and you could just go to the website, start using it. It's pretty intuitive to use, especially relative to Adobe Photoshop, which is known to be a little bit more intimidating because it is for more professionals or prosumers, as they're called. And it's just easy to use, and they'll upsell you then for sort of a monthly tier to get more features. And so that's on the low end. The other fear then was that these other companies would create these point solutions, these specific tools that could go after kind of the Adobe suite of products. And so you had Figma was one. They were really good with UI and UX. So designing the website, designing the mobile app, and also designing software. So really good UI. And the reason why they're very popular is because the design elements can also be transferred into code and integrate to coding software very easily. So you're not just designing it, at the same time, you're also kind of coding it. And so that's why that became a very popular app. And so that was on the UI UX front. That was one vector of attack. And then you have all of these other apps kind of going after the video software. That's kind of an older story. Stuff like Apple's Final Cut Pro, DaVinci is another one. You have Avid Media Composer. That's the most popular one in Hollywood. And CapCut, which is a ByteDance product. That's also a super easy video editor. First to kind of do shorts for on mobile, but also expanding out to other sort of video editing. So there is competition there, but within that, Adobe's Premiere Pro, that's the name of their video editor. That's kind of the biggest, maybe has 35-40% market share. And then everything else kind of tails off from there. So it's still the biggest, it's still an industry standard, but there's competition there. But that's also nothing new. The competition has existed there for a while. And so you could see that there's these point solutions picking at them. Figma, maybe you guys have heard, they tried to acquire them for actually $20 billion because they're just such a superior product to them. Ultimately, they seeded that market. The acquisition was blocked. Figma still is a dominant leader in there. Despite their stock price, they're still doing well in gripping a lot of that market. Adobe basically said we can't compete with them. And instead, now they integrate with them. So they're trying to say, you want to use Figma for your UI UX design, that's fine. We'll integrate with Adobe. And we'll talk about why that integration makes sense because it all kind of feeds back to this other second business segment, which really makes them more of a platform and integrated more with enterprise. And it's talked about less. So it's an important aspect to understand. Then you have on this other end, Canva, that was coming at the low end. And so Canva is, pretty formidable competition to them. Last round, they were valued at around $42 billion. They're doing about $3.5 billion in revenue, at least last disclosed. And now they're moving up market. They just made an acquisition of something called Affinity, which is to try to push them more into the pro market. So Canva, how much success they're going to have moving into the pro market, not clear, but for them, it's all market share gained, right? Potentially at the cost of Adobe. So that's kind of, the competitive environment. There you have an industry standard product, you have a suite of products. And so a lot of people buying Adobe, the benefit is you get everything. It's integrated. You can move files from, one app to the next very easily. It's all in the Adobe format, which again is kind of the common format. A lot of times, if you are a freelancer and you have a client, they're going to want the files to be in that Adobe format. So you can't really make something in Canva and then transfer it to the Adobe file format. Well, you can, but then if you do that, you have to usually kind of fix the layers and do other things within the app to actually make the file kind of correct and modifiable the way a client would want it to be. So that's kind of why Adobe, despite the fact that there has been this competition, they've been able to withstand that generally fine. So that's kind of the competitive landscape on the creative front. These are all tools to adjust digital media and all that. And of course, we're going to get into AI, which, many people will fear changes all of this dynamic. And so that's going to be an important factor that we hit on. Just generally too, for an analogy, if you think about Slack, a lot of people in Silicon Valley, they say Slack is a much superior product and it's for internal business messaging if you're unfamiliar with it. Microsoft Teams rolled out a competitor product. People don't like it. It's not as good. However, it's vastly more superior because ultimately you're talking about buying a suite of products and Teams is just one product included in that. And you want it to integrate with all the other aspects of Microsoft Office and you're probably already paying for it. And so it doesn't matter that Slack is a better product, more people are on Teams and it kind of killed the Slack business, at least really weighed on their growth. So that's just a metaphor to kind of think about kind of the Adobe creative software suite of all of these different products. So then we move on to the Acrobat Studios suite. That's going to be everything dealing again with the PDF, the document editor, all of that. That's more like a $25 a month product, a little cheaper. But what's interesting is the end markets are very different. It's a lot more finance end markets, legal end markets. And so very different sort of end market there. They've still been growing that business a lot, despite the fact that you should feel like there's a better way to edit a PDF better, but it still gets a lot of market share and it's kind of the de facto standard. And so that's a smaller business for them, but it gives them some diversification because the end markets too are really different. The creative business, that's kind of what's most at risk with AI. But before we even get into the AI risk, we kind of have to understand this competitive moat a little bit better. And to understand that, we have to talk about their second business segment, which is going to be the digital experiences business, which is 25% of overall revenues, or about $5.4 billion. And so right off the bat, this is a lower gross margin business. It's about 72% gross margins. And so I should say relatively lower gross margins, because that is still very high gross margins for a business. And so it still matters though, because it's still 25% of the overall gross profit pool, but it also is kind of a part of what enables the creative business to be a little stickier. Because people that use the enterprise part, this experiences platform, it's called Adobe Experience Manager and then Adobe Experience Platform, who use that, they tend to be stickier clients because they use more of the overall Adobe suite. So they tend to be some of their best clients, even if the gross profits here are relatively smaller. And so think about what we were just talking about as the thing that creates the digital assets. It'll create photos for ad copy, videos, all sorts of different digital assets that could go on a website, a mobile app. So the Creative Cloud creates the assets. The digital experience segment basically manages all of these assets. So it's all about the workflow. It's all about managing all these assets, measurement capabilities, seeing what works, doing analytics, and seeing what sort of assets they should produce more of. So let's say that you're Nike. You might use Photoshop and Lightroom to sort of create an ad. And then once you have this ad, you will then want to send it to people. So then you'll use the Experience Manager to segment out all of your different audiences, to say different audiences should get this version of the ad. Then I want to see sort of the feedback of what ends up happening. Do certain people click on different things with the email? Okay, we're noticing that this sort of ad's getting more clicks than this one. Let's push this ad out to this segment too. What is the measurement of all that? Maybe once someone clicks into the ad, I want to make sure there's a custom web page we created, and then we could track that. Maybe we have different versions of the custom web page, and some web pages do better for other customers than other ones. And so that's called the customer journey. So they're managing all of this in the Adobe Experience Manager. And so this is a very important aspect of all this, because once you have the digital assets, you need to get them deployed. And if you're going to deploy them, you want to make sure they're deployed the most effectively. And so it's not enough to just create something. You have to make sure it goes to the right place. And that is what this basically business segment does for enterprise customers. So you could kind of break down like the key value prop here into these 4 different groups. So the first one is going to be CMS. That is going to be content management systems. And so this is going to be making sure the right content is shown to the right device. Because remember, there's not just one iPhone. There's a dozen different variations of them, different screen sizes. Then you also have Android, different screen sizes there. Some people may be looking in a mobile app. Some people may be on a mobile web page. Other people may be on a tablet or on a desktop. And so you want to make sure that on all of these different devices, the content you're creating resizes correctly and looks good. So all of that is in CMS. And so you can already see right away there's multiple layers of complexity than just creating an image and posting it somewhere. You have to make sure it shows up in all these places as, the correct format. The second aspect of this is going to be digital asset management. This is where they have all of their sort of approved copy, all of their approved images. And so in some cases, you're talking about Nike, what do you have? Thousands, tens of thousands, hundreds of thousands of different ad copy across time. Maybe you have thousands of different versions of the same ad that you're using in different markets that are in different languages. Maybe they have different pictures on them. You want, a certain person who you think is going to resonate with this audience in this local market and a different person for this local market. And so all of that is going to be in the digital asset management. So brands know where all of their approved digital assets are. So they can't, push out to 100,000 people the wrong ad copy. So they want to make sure it's all organized, it's brand safe, it's brand approved, and all of that comes back to the digital asset management platform. The next aspect is going to be CDP, or the customer data platform. So now this is where we're going to segment out different audiences. We're going to want to personalize the experience for all these different audiences, send the right emails, push notifications to the right people. So that's another thing. And then the last one's going to be analytics. Every everything we just did, we want to analyze. We want to see what is working the best, refeed it back to, creative to say, hey, this sort of ad copy is working the best. Can you go ahead and change that? And they do this all on the same platform without leaving it, which is why having this integrated is very valuable for an enterprise. Because if you're using this whole platform, it's so much easier for creative to just send the copy, keep it all in the same platform, deploy it somewhere else, make changes to it, get feedback and say, go ahead and change some of the coloring on this, some of the sizing on this. Let's put a different person in this one. They can make all those changes much quicker than having to, pull the ad copy out of the platform, transfer the file format, then make the changes, then re-import it. All of that's a lot of friction, and it's usually just not worth it. Why would you bother doing that? So having this whole platform is one of the reasons why Adobe is actually stickier than maybe people realize. Not that it's, totally mission critical. There are alternatives, and so a lot of companies use multiple different tools and all that, which we'll talk about in a moment, but it is pretty embedded in workflows, which is important to note. Now, this segment was built with a lot of different acquisitions. You have Workfront for $1.5 billion, Marketo for $4.75 billion, Magento Commerce for $1.7 billion, Omniture for $1.8 billion. And so all of these different marketing analytics tools, workflow tools were acquired and embedded into the sort of Adobe platform. And this is something that they did really in the past, call it decade, 8 years really, to help kind of increase the value to enterprises and embed them more into the workflow. So that is this segment, but I think a lot of investors overlook it, and they do so with kind of misunderstanding then what Adobe's kind of advantage is, because a lot of these aspects make the creative platform more compelling. In addition to that, though, it also presents new risks from new competitors. So there is a risk here of encroachment because the likes of SAP, Oracle, and especially Salesforce all want to kind of do similar analytics, measurement, helping segment audiences and all that. And so I want to talk about Salesforce here, which is probably the most formidable competitor, at least at this point. So they are a system of record. So what that means is a lot of times when you go to a website, you put in your email, your personal name, that gets stored in a customer database that is often managed by Oracle. Now, Adobe, though, and this is important to understand, they very often carry the behavioral data. So when you click on an email and there's maybe 5 different links, which link did you click? Then you go to a web page. What was your flow on the web page? Did you open up a few different products, close them, check different sizing? Did you go to open a shopping cart on there, but then back out? Whatever the behavior is, Adobe captures all of that data in live time. So they are the best look at all of this live time behavioral data. Now, there is a transition happening, which is called zero copy. And so what is happening is that these data warehouses, like Snowflake, for example, are now just going to carry all the data, and it's not going to be stuck in any one app. It's going to be agnostic, and all of these apps can now query the data warehouse without having to store the app in the service itself. Now, there is a kind of a negative ramification for that, because you no longer have the data in kind of a walled garden, which means now other players can use this data to create products on top of it, which is exactly what is happening. So Salesforce now has their AI agents that are going to this data warehouse. They're pinging all of the data, and they want to be the ones now that are segmenting the audiences, that are pushing out the emails, that are doing the personalizations. And so that business is growing pretty quickly for them. Adobe, though, they still have that live data because it's not automatically transferred to the data warehouse. Right now, it could be a couple hour lag, but even if it's a handful of minutes, that may not be good enough. If you're a marketer and you want to very quickly know, okay, should I push this ad out, this one, which one's working better? You want to watch that in live time. But that is kind of a risk that's happening there, is that data warehouse kind of democratizes the data for everyone. Other software players can build apps on that. And as an enterprise, of course, you don't want to be beholden to anyone holding your data. And so that is kind of something that is moving a little bit there. Now, generally speaking, though, the way you should think about Adobe is they use the front end and their place with the front end to then try to leverage the back end. Whereas in contrast, Salesforce is kind of using the data in their customer relationships on the back end to try to move more to, the front end, the communications aspect. Adobe will probably continue to be preferred for brands that really care about how stuff looks, because Salesforce, they may be able to send the emails, but they don't have all the digital assets. They don't have all the copy that can be A/B tested, and Adobe does. And we're going to talk about how AI could actually be a big enabler for Adobe in a moment. But the real sort of risk here for Adobe is that the platform isn't used as much, and it's used as sort of a point solution. And so maybe it still gets usage from enterprise, but now they're using more tools, more specific tools for different things. And you have the data warehouse that has all their data there. and they're kind of pulling a little bit out of the Adobe ecosystem. They may not cancel their subscription, but it has ramifications for future pricing power and potentially churn, at least of specific products. Maybe instead of the whole suite, they're just subscribing to more specific products, using them as a point tool. So that is kind of something that's happening right now. You don't see this show up in the numbers though, because again, all of these businesses are still growing. These are fears that have not translated into actual financial impact. Of course, an investor wants to be aware of them before they do translate, but at the same time, there's no evidence that they are. So now we are going to get to the big one, AI. This is going to be something that will both enable a lot of Adobe's business, but is also a threat, obviously, right? Because can't you just go to Google Gemini, plop in a photo, some copy from ChatGPT and say, make me a great ad? Out comes the ad. I never have to touch Adobe. I could then use a Salesforce AI agent to tell me where to send all of this copy to, and I never need to touch Adobe again. They're out of the game, right? Well, that is certainly what many people are fearing, but the reality is much murkier. And in fact, it looks like AI could be a beneficiary for Adobe. And so ultimately, the entire AI discussion, it boils down to this one key question. Is AI going to become commoditized? Because if AI becomes commoditized, then the real value lies in distribution. And who has the distribution now is going to be Adobe. Now, while they do have their own AI models, which we'll talk about, they don't have their own kind of leading edge model. And so if there's one AI provider that ends up dominating image generation and video generation and doesn't want to share it with anyone and makes all of the customers go to their own platform to use it, well, that would be a negative for Adobe. There's no doubt about that. If you're just going to the super good photo editor, you go to the website and they're generating the photo for you there, then they could very easily decide, hey, I'm going to add a few tools to help you edit the photo a little bit more right there. And then from there, I could build up whatever business I want. I could copy a lot of Adobe's business, but since a lot of the value lies in the actual generative AI capability and no one else has this, I have a huge advantage, and that's going to just naturally draw a lot of customers to me. That would be a bear case, but you can look around right now, there is no clear AI winner. They're very much vying back and forth for leading spots, and a worse model is not that much worse than the second best model, and some models that are even considered the best aren't good at everything, and the bad ones are sometimes good at other things. And even on top of that, when you're looking at Google and OpenAI, who are thought to kind of be leaders here, they share their models right now with Adobe. And so as it stands, it looks like Adobe's going to be fine with AI because they have these 25 different AI models that are already on their platform. And so if you want to use, Google, they have Nano Banana, but again, I did not endorse the naming of that product, but if you want to use that, you can use it right in Adobe. And if you're using it in Adobe, then you have the benefit of it tying to everything else in your workflow. You also have the benefit of being able to use Photoshop, Illustrator, Lightroom, all of their apps to adjust it because AI isn't that good as it stands today. You cannot just type in, give me an ad of XYZ, and out it comes perfect, published, ready to go. You got to get rid of the six finger. You got to adjust some things, So as long as that's the case, you still need Adobe. Now, there is a little bit of a risk where a lot of maybe small businesses won't care and they'll say it's good enough. We'll talk about that in a moment, but they cater to enterprises. Enterprises care about how their ad copy looks. You're not going to look at Louis Vuitton publishing something with someone who has an extra finger or, an arm that is not properly attached to their body. And so as long as that is the case, you again still need Adobe. And so the AI sort of issue for Adobe doesn't really have to do with generative AI. In fact, generative AI is an opportunity. Because if you are creating this ad copy and you're A/B testing and all that, you can use generative AI now to create you 1,000 different versions. Give me this similar ad, change the coloring and the position of the person and the position of where the word is 1,000 times. I want to segment this out to all these different audiences, A/B test which one is the best one, which basically means some people get some version of the ad, some people get another version of the ad, and then I can measure which one's the best. I could then use Adobe Analytics to see which one is working the best and then push those out to a broader audience. You could do that all right now in Adobe. And so in terms of actual creation of the content, it seems like Adobe is going to be okay there because they're already deeply embedding AI into their products. Now, if all of their AI model partners decided, hey, we're not going to use you anymore, that would be a negative for sure. And I guess they could do that, but they wouldn't want to because right now they need distribution, and Adobe is giving them distribution. They want their models used so they can make them better, and they also make money when they get their models used. There's a business model shift there that we'll talk about in a moment. The other thing Adobe has for them going is their Firefly model. This is their own model they created that is trained on Adobe stock photos, so it's going to be commercial safe for enterprises, because you don't want to generate an image or ad copy or a video that inadvertently was trained on something they're not allowed to have, because then they'll get sued, and they don't want to get sued. So this is the only AI model that's out right now that's sort of brand safe for this generative AI content. So that is the Firefly model. And so they have that Firefly model, they have all their partners, they have the biggest AI models currently on their platform. And so it's hard to exactly see in this scenario why people leave because of AI. Now, there are other risks in the business model, and there's going to be two that we're going to talk about. It's going to be the business transition and what I'm going to call the Meta Google walled garden risk. And so that one's another one that's not talked about so much too. Now, the first one is a real threat to Adobe. Right now, they charge on a per user basis. So if you subscribe to Adobe, you're giving them, $40 a month, or your company is, and you do that across, 1,000 people, whatever the number is. It's a lot of people using the product. What happens though, if now there used to be a design team of 10 people and AI makes them so efficient that you only need 2 people on your design team and you could let go of the other 8 people? Well, instead of paying for 10 seats, you're now only paying for 2 seats. That's 80% less seats, and that is going to be something that is facing their business model. And so they're aware of this, and they created something called Adobe AI Generative Credits. So now you use credits to use the AI model. So, a subscription may get you 2,000 credits a month, 4,000, whichever one it is. You could buy additional credits too. And so it's quasi moving to a mix of subscription plus usage. So if you are firing these other people because it's making you so much more efficient, you're going to be using their products so much more, and they're going to charge you for that extra usage. And the hope is that those two balance out. That is a risk. We don't know exactly how those two things will balance out, whether or not they're going to be able to make up for all of that seat headwind with the generative AI credits. So that's one thing to be aware of. But this is a little similar to what happened to them before when they went from a transition from licensing to SaaS. Now, we rewind the world back to, call it 2010, and software as a service didn't exist. This was a brand new business model at the time. Before, software, including Adobe, was sold on physical disk. You would buy a physical disk. Maybe it would come with a bunch of different disks to install all of their products. You'd give them $1,200 to $2,500 for this bundle of disk. You'd install them onto your computer. And a couple years later, when they upgraded the software and you decided it was good enough, you'd go and buy a new disk and you give them $2,000 more. That was their old business model. They transitioned it to what we now know is a subscription business model. Almost all the revenues come from subscriptions. Now, at the time though, and this is key to remember, many people thought this would be a worse business model. And it may be crazy to think now because we think, oh, wait, it's going to be subscriptions. You're going to be paying me every month. That's recurring revenue. Isn't that a better business model? Well, think about what was happening before. You would give someone $2,000. That was cash up front that they got for their product. Now they're saying, hey, we're going to make a lot less money. Instead of $2,000 up front, you're going to give us $40, sometimes less, and you're going to give that to us over many years now. And so we're getting much less money up front, and it would take us years to recover how much money we used to get. On top of that, if you were to buy our software for a couple grand, guess what? You're locked into it. You're not going to go buy someone else's software. But if you're only paying me $30 a month and someone else comes out with software and theirs is only $30 a month, maybe you switch. Maybe you churn back and forth. Maybe you decide, hey, I only need to use this for this one project, this 1 month. I'll use it for that. And then I'm leaving your ecosystem and I don't need it anymore. People were really worried that this would be the case. And even if that didn't happen and if the transition went smoothly, you're still talking about $2,000 of revenue from selling a disc, moving to maybe $500 of first year revenue, moving to the software model, and you having to work multiple years through that to get back to your old revenue base. This is what a disruptive business model transition looks like. But it is worth noting that the current CEO, Shantanu Narayan, was CEO in 2007. He oversaw this transition actually in the past. He transitioned the business model from licensing to software as a service. So as an investor, he's seen what it's like to go through a business model transition like that. You know that management has been able to handle something like this in the past. But it's still an open question, though, exactly how these two elements are going to balance out. It is a fine balancing act he has to do of raising pricing without aggravating customers too much, while also offsetting potential seat shrinkage. Now, again, the business is still growing, and so we haven't seen too much of this, but we're hearing anecdotally of a lot of stories of how efficient software engineers are, how companies are not needing to hire quite as many of them because a couple people can do the job of many people. Now, generally speaking, they're just saying, well, now we're getting a lot more work done and it's great. But is there a point where that's not the case? There's only so much graphic design work to go around. And if AI is going to do more and more and more of it, then you'll need fewer and fewer designers in the future. That's scary for them. But again, as long as AI is commoditized, then their distribution advantage is what is going to matter the most. And so these AI models will still need them to get their models actually used. And so that is the conversation around AI. It's not quite the risk you thought it was. It's not just Nike going to Google Gemini and saying, create me a new Nike copy ad. Boom, let's publish this. Instead, it has to do more with the fact of the seat dilution. And the second factor that has more to do with a little bit of end market erosion, encroachment as well. And so we need to talk about Meta and Google now, because they are known, of course, as an advertising powerhouse. Currently, if you're advertising on Meta, you're probably getting the highest return on ad spend possible. Now, the reason why that is happening more and more is because Meta is taking away much of the decision-making from the advertiser. Initially, this started with targeting. Who is going to see the ad? You don't need to worry about segmentation. We're going to use our algorithm to figure it out. But now it is moving more and more to actually creating the advertisement itself. You could give them a rough idea for the advertisement and they'll create the entire thing for you. Then they can push it out to a small audience, start testing it, do 100 different versions of it, test it in a broader audience, see which ones work the best, then push it out to an even broader audience. So as an advertiser, you're giving them nothing but money and you're stepping back entirely. And it's a similar thing that Google's doing too with generative ads as well. Now, this is a little different than what we were talking about before, because before when we're saying the AI risk to Adobe was AI can create the perfect sort of ad and then Adobe has nothing to do because people won't edit it. This is different because in this case, you're talking about small businesses who maybe used to go to a graphics designer, pay them to create an ad for them and then run that ad. And now they don't need to do that because Meta is doing it entirely for them. And so their end markets of artists, graphic designers are going to start to shrink. Now, Adobe is a little bit more protected of this versus competitors because again, they tilt more towards enterprises and enterprises care about how the ad copy looks. They're not going to want to risk the ad copy, the generative AI, having something that looks wrong that could get them in trouble. And so they don't want to use that. But if you're a small business, you don't care that much. If you're selling, all of kind of the stuff you could think about sold on Temu, a bunch of knickknacks, massagers, sweatpants, foot baths, random crap like that, you don't really care about how the ad copy works. You just want to know you're getting your return on ad spend. And so those customers maybe now are just going to Meta and they're going to tell them, do everything for me. And I think that's going to happen more and more. And it's going to be good for small businesses, not so great for this graphic design industry. But again, those are not really Adobe's core customers. And so they should be a little bit more insulated from that, because even if you are a small brand, you're still going to care about how the brand looks if you want to build any sort of brand. So you're going to want to say in the ad copy. And so Adobe does this too, though, with the generative AI. You could give them an ad, they could change all the colors, but they could do it in a safe environment where the generative AI is not going to be generating stuff that could not be commercially safe for you. And so that's just some other factor there. The other delineation to keep in mind, though, is that there's two categories of ads. There's direct response ads, which have a call to action in them. So that means, buy this thing now, you're gonna be healthier or save 20%, click, and you want to complete the flow right now. And then the other sort of ad is brand ads. That's more top of funnel, brand awareness. Nike, it's just what you do. They're not selling anything in that ad. They just want you to know that, what Nike is, they exist and all that. So those brand ads are not probably going to go to generative AI because there's nothing to really measure. And so the generative AI won't have anything to really know whether or not it's working well or not, because brand ads, you put them out there, people see them and it very slowly resonates with them or not, you don't immediately get that sort of feedback. And also, if you're dealing with brand ads, you're going to, again, want to control your brand if you want to build a brand. And so that's going to be more of Adobe's business too as well. So that's another risk kind of out there that, maybe is not the most formidable to Adobe. But ultimately, the question always comes back to what's priced in, right? Because we've talked about a lot of risk. A lot of them aren't directly related to AI. They're a little downstream of AI. And the question is, how much of these are priced in? Because competition exists in this segment. Just because AI isn't a risk doesn't mean there's not any risk, but I feel like we've talked a lot about them and you have a good handle on what they are. And now the question is, are they priced in? And so at a $272 stock price, their market cap is $112 billion. The stock is down over 60% from its peak price of $688. So it has been beaten down a lot. In the last 12 months, they generated $7.1 billion in net income and $7.9 billion in free cash flow, and that is after backing out stock-based comp. They also bought back $9.5 billion of shares in the past year, and not to mention, they're still growing revenues. Despite all of these fears of risk, all of this talk of competition, revenues are still growing. Now, you can push back and say, well, that's backwards looking and things can change in the future. And that's going to be a key thing for you to decide as an investor. Because if you do think that they could still get you, a high single digit, very low double digit growth rate, then probably a 20 to 25 times free cash flow multiple is fair. And so that gives you upside versus the current trailing 14 times free cash flow multiple of about 43 to 79%. But then of course, the key question is going to be whether or not the past is going to be similar to the future. Now, I don't give recommendations, but these are key things for you to consider. Are you comfortable holding this business? Do you think CEO Shantanu Narayan is going to be able to gracefully transition this business model? Are you worried or disagree with me on what I said the AI risks were? Go ahead and comment below. But if you want more content on Adobe right now, check out these two videos here. They cover a lot more aspects of the business and the products as well. Just because I recommend them, it's not an endorsement though of his viewpoint on Adobe. It's just me saying that I think there is some good analysis in those videos. And if you want another video on a software stock that's been beaten down, go ahead and check out this video here on Constellation Software or this one here on Netflix. And if you have any comments or questions, go ahead and drop them below. Thank you for listening, and go ahead and hit like and subscribe if you're enjoying this content.